Welcome back to Fast Forward, powered by Futureworld. As you know, this podcast series is focused on 5 mental models shaping the way that leaders think about the future. We've covered a few so far, from the boiling frog paradox to the Ptolemaic pivot, the lighthouse keeper's dilemma, and Cassandra complex. What we're going to focus on today is Darwin's Finches. This is actually one of the most exciting ones that I've looked at in terms of the theme for the podcast overall. One of our co-hosts, Antoine Musgrave, is devastated not to be on the pod this week. He is traveling, but he's the one that's actually been to the Galápagos. He's seen Darwin's Finches firsthand. And it's over to us, unfortunately, to take the baton forward and move this conversation along. Before I get into it, just to introduce myself, my name is Matt Lawlor. I'm one of the leaders at Futureworld, and I'll be your host for today. But you won't, for a change, be listening to me that much. It's more about our guests. Today, we are very, very lucky to have Pule, Taukobong, private equity, venture capital, a maestro of the investment world, doing some really, really exciting things. Pule, fantastic to have you on the pod. Thank you so much for being there. And then our other guest is none other than Louis Geeringh. Louis, welcome. Not a stranger to the pod. You've been on 1 or 2 episodes already. I have it on good authority that your digital fan club is growing with every stream and download of Fast Forward. So let's hope that we've set the bar high. We're going to exceed it even more on the podcast today. So gents, thank you so much for being here. Really, really appreciate it.
Thanks for having us.
Brilliant. Guys, I think before we jump into the metaphor that we're going to be exploring, as I said, Louis, we know you a little bit. The folks online know you. Pule, maybe just give us a little bit of background. I suppose the thing that really struck out for me when we decided to get you onto the pod, the name of your private equity firm, the Intrepid, just fits so well with this concept of adaptability and Darwin's Finches overall, bravery, adventure. There's a lot in the name, but I know there's a lot in the journey that you've been on. Maybe tell us a little bit more around that.
Yeah, the journey is quite full of many different facets, actually. So at my core, I'm a tech nerd, so a software engineer, software developer, who became very fascinated with how tech and investments overlap together. So it's an interesting time we find ourselves now because I have those 2 skill sets, right? It's like learn to code, then come to that, became a stockbroker, became a wealth manager, ended up in New York doing asset management, and then kind of went pretty, I would say, obsessed with understanding different asset classes, right? So angel investing, venture capital, now private equity, but also coming from a listed markets. So to now have all those skill sets in, call it one pool, I'd first and foremost say I'm leading with an investment hat rather than just pure private equity or pure VC. And as the Intrepid, we're very excited about the opportunities we see in South Africa. I think when I moved back from the US, this was 2021, I'd been stateside for 10 years. The immigration officer said, "You're the only one coming this way, everyone's going that way." And I was like, well, you know what you know, right? You know what you know. And I think it was a good time to come back. I think, yes, pessimism was high, but that's where you need a vehicle like the Intrepid to navigate the sort of scenario. And I think it's been a great journey so far.
Amazing. And I mean, in your life before that as well, obviously based in the US, but, African-focused investments
Correct.
as well, early investors into Yoko, Sweet
Yes.
South, maybe, tell the folks a little bit about that as well.
The first unicorn that I invested in was a company called Andela. So this is a company that I think at its core has fundamentally, their kind of ethos or philosophy was brilliance is evenly distributed, opportunities not. And I think that's a lens that I wear on my heart and sleeve galore. And that's why I think Africa has always been thought of as like, yeah, it's that continent, it has this opportunity, but what is it really? And I think as the Intrepid, as myself, as a VC, I've always recognized the brilliance that exists in there. So Andela was a company that started off with saying the US at the time had 2.5 million open software engineering jobs, but Africa had 50% youth unemployment. So how do you solve for X? And fast forward today, it's probably a $2 billion plus unicorn that predominantly the tech talent sits on this continent servicing the globe. It's not just African companies. And I think there's a lot of stories like that on this continent where we just need to highlight the brilliance, give it the opportunity, and find more unicorns.
I think as we get into this metaphor overall, it really is around this concept of adaptability, shaping opportunity where others see disruption and challenge. I want to get into it a little bit, Louis, phrase a few questions for you. And one of the central ones is this concept of the sort of time constraint that we live under at the moment. A famous quote, we're probably going to see more change in the next 20 years than we have seen in the last 100. In evolutionary biological terms, Darwin's finches, were, I suppose, lucky in a way that they had a bit of time on their side, right? Evolution happens, especially along the Galápagos and, 200 odd years ago, at geological and evolutionary time scale levels. Corporate startups, especially private equity firms, don't have the luxury of time. If anything, speed is becoming commoditized as we know it now. Your thoughts on these tumultuous times that we're living in and this concept of speed, time, change, etc.?
In the Western world, we live on different timelines and time horizons. A quote that I've always loved is the Chinese have a saying the best time to plant a tree was 20 years ago, but the second best time is today. Of course, I think we'll all realize that the rate of change seems to be increasing all the time. And I guess the logical corporate response should have been that one also needs to kind of increase your rate of adaptability and so forth. But of course that doesn't happen, which is probably why we're seeing this increasing rate of turnover of companies out of these large benchmarks like the S&P 500, global companies becoming less relevant and at a faster rate. And therefore, I really believe it is the age of the quick and the dead. You're either quick to adapt or you're going to be facing extinction very, very quickly. And I think that the difference between the point around the Darwin Finches analogy and what we in business have to deal with today is exactly the point you make, Matt, is they had many, many years, hundreds, thousands of years. But as the environment, and it was a response to a changing environment, and as that time that you need to adapt is compressing all the time, unfortunately, some companies and individuals, us in our relationship with our children, we get caught with our pants down.
A lot of the work that you've done in the past and currently do is with large corporates on a global scale. Why do you feel that many of those corporates are more reactive or slower to react than they should be?
I think firstly, it takes leadership. And it can be a very generic thing. Yes, leaders need to, you need leaders and leadership. But unfortunately, companies get told your core business is XYZ. You get told by analysts, your core business is XYZ. And it becomes very difficult for executives and leadership teams to actually then look beyond what has been defined as the core business. And it gets even worse. They become prisoners of their name.
Right.
I have so many companies, that I've worked with over the years. If you take mining, you are XY coal company. It would have had a very different outcome if they were called XY Energy, because it would have given them a completely different remit around what they could do with a business. So, I think companies, and I must confess, given my experience internationally in South Africa, South African companies are particularly bad at that. And to be honest, I believe one of the reasons we've got great skills in this country, we've got great CAs that are running large corporates. But you get taught as a CA, and I must confess I'm one myself, but you get taught risk management. You don't get taught opportunity management.
Yeah.
And you find South African company large boards with many, many non-executive directors who are ex-CAs that are fixated with the risk management, but no opportunity committee. You've got a risk committee, you've got a compensation committee, you've got all, but no large company in South Africa that I know of creates an opportunity committee to actually say, what else can we do? How can we do capital allocation in unique ways? And I mean
to piggyback off that, one thing that when I came back from the US, and obviously I had a strong VC bias, and then stepped into the PE world and back into the listed world, I was shocked at how few directors or board members had equity in the companies they were on.
Yes.
Like, it blew my mind to say, wait, so this is how it works in the listed world, this is how it works in PE, that you have boards of people who are like really thinking how to move this, but they don't have equity? It didn't sit well with me. It shut in my mind to say that, of course it's misaligned. Like, you've got to have equity as a board member, my personal view, so that, you know, that innovation is happening, or you're thinking about the opportunity that you can do, and versus like things staying as per the norm because you're not actually incentivized to think differently.
When we think about this concept of adaptability, naturally one starts thinking about the capabilities required to be successful in business. You know, whether it's in a large corporate, in a small startup, or scaling. And it's a difficult one for me. I mean, my daughter's so young, I still measure timeframes in months, not years, right? So it shows where I am on that parenting
Don't worry,
journey.
it'll change quickly.
It does. It's frighteningly quickly. But I start pondering about, you know, what will my daughter need to study one day? What skills will she need? What capabilities going forward? And it's this dichotomous relationship between specialization versus this new age of generalists, but probably adaptive generalists is where things are moving. And it's a tough one, because often we hear, you know, certain startups need to be successful and you need to focus on one thing, which is good, a specialization of sorts. That's how you build a moat. But we often see that as these organizations progress, and, you know, my interpretation of what you were saying earlier around this concept of core business, Louis, the moat quickly becomes a cage. You know, it quickly almost, you know, goes from being a protective element to being something that hampers your growth. If you think about capabilities required for success and this concept of dynamic capabilities, I suppose a quickfire question to either of the gents across me from the table.
One of, just leaning back a bit to angel investing and venture capital, I think it kind of gave a cheat sheet to folks like us of how to think about this. It's very rare for a company that becomes $1 billion plus company to do what it started off doing, right? So by virtue of being an early stage investor, you're actually comfortable with the thought that this company is going to have to pivot, change the team. We used to call it the 111. So there's the folks that take the business to the first $1 million of revenue, then it's $10 million of revenue, and that's $100 million of revenue. Very rarely is it the same folks at the helm, and very rarely is it the same strategy sometimes. Yeah. So we've seen companies have to change, in some instances, quite quickly. COVID happens, fully remote, how do you approach customers? And it's that testing for founders of how can they pivot. And I think the other thing is, yes, adaptability is part of it, but I think what we spend a lot of time on is anticipation. So what do you anticipate is going to happen rather than always having to adapt in the circumstance? So perfect example is right now, I would say, of global capital allocation, Africa probably gets less than 5%? Like, we're still small, right? But at some point, capital is going to have to come here. What is it going to be looking for? What sort of industries, what sort of sectors, and why? So as you build up what you anticipate happening, you can have a strategy around it. Yes, you may have to pivot and adapt, but we spend, in the US, I'm not a ice hockey fan at all, right? It's that puck is tiny. You can hardly see it, whether you're in TV or in person. But apparently like part of the strategy is anticipating where the puck's going to be, right? So that you always got to anticipate, okay, it could be there, it's going to be there. And I think that's how we've thought about investments, or spend a lot of time, is that anticipation and then adaptability.
When I was doing research for this episode of the podcast, it's amazing how many metaphors and sayings are linked to this. So it's the famous Wayne Gretzky quote, skate to where the puck is going to be, not where it has been. And Louis, I know one of your favorite sayings with regards to strategy from that famous 20th century philosopher. I'm not sure if you wanted to maybe just tell the people on the pod around that one.
Everyone has a plan till they get punched in the face.
Mike Tyson.
Indeed.
Good.
Indeed.
Yeah.
Louis, but I mean, your thoughts on that as well, maybe around that, Pule's point around the anticipatory view, the sensing, in our world in advisory, we often call it, future foresight, the world of scenario planning, things of that nature, but just being proactive in sensing rather than the reactive nature that we often see.
I mean, Matt, you would know, we so often plead with clients to build that capability and to be more anticipatory, to understand. We call it the signals, Pule. Trends mean nothing in a VC world.
Totally.
Because once you invest in a trend, you are going to overpay. You're going to be up that S-curve and you're going to pay into the hype. So you need to look for those unique signals that nobody else is seeing, that you can progress, that you can invest in, that you can capacitate. But the reason why companies are singularly poor at doing that is a very simple concept. At the time when that signal, or in the early stages of the trend, manifests, the common wisdom is it's too small to warrant management attention. And then, of course, if you're in a billion-dollar company and the revenues that you can generate out of that opportunity at that point in time is $1 million, it means nothing. We look after big stuff. We look after hundreds of $1 million opportunities. The next year, 1 becomes 2, and 2 becomes 10, and 10 becomes 30.
Yeah.
And that is the problem. And what I think companies potentially should be doing, I call it the tyranny of awe versus the elation of and. Strategy was okay in many years ago. Pule, you probably were part of many of those conversations where you write the flip charts full in a strategy session.
Yes.
And we walk out of there, we write it down, and off we go. And that's what we're going to do for the next 3 years.
Yeah.
I mean, that is a very bad business to be in right now, because nobody asks for that anymore, right? So the point is that I think the key competitive advantage is agility and how quickly you can change. But so many companies are so focused, 99% of their bandwidth, most often 100%, is focused on operating the business of today with zero capacity or investment or capital allocation in the new. And that's why it simply doesn't. And the end of my story is, I think, to do justice to the dynamic world that we are living in, if we can just get companies, us as individuals, to actually start paying more attention to the and. You have to operate a company successfully and profitably. I mean, it goes without saying. But unless you do the and as well, I don't think the survival rate is going to be very low.
No, I totally agree. And we are changing very quickly. You talk about kids, and 4 or 5 years ago, we were all telling our kids software engineering is the thing to go study. That's where the moat is. That's where, because of AI, you need software engineering. That's kind of the worst thing, unfortunately, that you can go study.
Yeah.
It doesn't have much of a moat at all. And so when you take that, that's an education perspective in raising kids. How much more faster do you need to be able to move in companies? And there's still lots of opportunity. I'm a big... there's a very famous VC in the US, Mark Andreessen from Andreessen Horowitz, and he often talks about Moore's Law. So Moore's Law, essentially everything, processing speed doubles. But the key with Moore's Law is that things are supposed to get better, faster, cheaper. So if you think about the TV, the laptop, they've all gotten better, and they've gotten faster, and they've gotten cheaper. The 3 industries where that hasn't happened because of Moore's laws are education, housing, and healthcare. a Harvard degree in person is $100K.
Yeah.
Online is $100K. Housing is still going up. Medical costs. We often say, how do you create discovery health for everybody out there? Make it 1,000 Rand a month and have a premium product. These are all things that I think, as you think about how quickly the world is changing, these are some of the things that we can try solve as we have the tools to adapt quickly. As I read up a bit on the finches, so I knew the Galápagos Islands because of the tortoises, right? I never knew there was finches or anything. And the tortoises faced the same challenges.
Yeah.
They didn't adapt as fast as the finches, but they were pretty solid. And today, if you look at the data, the finches are at higher risk of being eliminated versus the tortoises. And I don't know what to do with that information, right? But it's sometimes there is kind of power in knowing who you are, staying grounded, but still adapting. Absolutely. And also anticipating what's to happen. But to change too quickly and be haphazard and not have a core fundamental, what roots you, can also be dangerous if you look at the tortoises. So it's a fast changing world. I go back and forth with the team of how we think about AI. But at the same time, when you look at the three industries that I mentioned, specifically in refirming markets like this continent, there's huge opportunity. People in Kenya are using YouTube to find rocket fuel or develop rocket fuel. So all of a sudden, if you take in the townships, you find 30 schools, you give 100 of pupils ChatGPT access or some sort of, what are we going to discover? What solutions are we going to find? So there's power also in this innovation, but you also have to be grounded at the core of what you're trying to do as a company. Question I have for Louis that I go back and forth on as well is, with the big corporates, going back to why do they struggle to adapt or anticipate where the puck is, how much of it has to do with being listed and quarterly reporting and just Jack Ma was shut down when he said his three priorities are customer, staff or employees, and then shareholders. And often I find especially in SA, it's shareholder first. And so you don't want to kind of put risk on that. But do you think the quarterly reporting and this analysts and all of that, how much stress does it create in not taking the risks or thinking differently or saying, I'm going to dedicate a team of 50 to do R&D and small bets? We don't see it.
Yeah, it's a great question. I think that absolutely has an effect. And I do think quarterly reporting and, shareholders and analysts will always shout, more money, make more money, make more money. But that has never changed. But what I do find is interesting is the iconic companies that we will look up to as iconic companies, they do find a way of doing that. Yep. And the market is rewarding them in share price appreciation and so forth. I mean, a great example for me is always is Alphabet and Google.
Yep.
I mean, Google was the cash cows, but to give credibility to the need to innovate and capacitate new businesses, even in competition with their own, like buying Waze, even though they have Google Maps or whatever, they inverted the organizational structure to say Alphabet is actually the world's biggest venture investor. And yes, we've got a cash cow called Google, and we will continue to grow Google, but we will build these other businesses alongside and drive shareholder value.
It happened with their acquisition of YouTube at the time. Many years ago now, people thought they were grossly overpaying for this, fun video app. What do you actually use YouTube for? It's not a real business. Analysts at the time probably didn't really understand the full potential that this can have. But if you look at it as the most almost pervasive platform for entertainment, education, edutainment, hybrid.
They didn't know what the potential was.
Yeah, to be fair, they probably didn't. I want to jump back just to those three industries that you mentioned, and because it resonates so strongly with me on this continent that necessity is the mother of invention. We've heard that saying for a long time. And if you think about the African continent, if we think about it, those sectors of healthcare, education, and housing are probably the most important when we think of laying a strong foundation for the next billion people on this planet coming through, the majority of which are going to be coming from sub-Saharan Africa. Anything else that you just wanted to share about that? I mean, have you got some good signals on the horizon of interesting things happening in that space?
So it comes back to this point about when you look at the investment landscape, how VCs think, how PEs think, how listed thinks. In VC, we are very comfortable with thinking hard about the cap table and who's on there early. So which shareholders are there. Even the potential acquirers are on the cap table already, adding value, helping strategy move forward. If I think about education, for example, I think education has huge potential to unlock a lot of economic power in this ecosystem. So, and I also don't believe in always starting from scratch. When it comes to online education leaders, India has got this right. So which are the companies they should be buying into on this continent, whether listed or large private companies that can add a lot of value to do that? That's how I think we should be thinking about it. Same thing with medical costs. India, again, has figured out high quality medical subscription products. How do you get those companies to buy 20% of discovery? Perfect example is, hopefully it works out, is this Canal Plus multi-choice transaction. It was very much a let's buy in, slowly add value. It wasn't let's take 100% of the company or figure it out. And it's typically been like that when it comes to M&A in SA and the rest of the continent. Like you either buy 100% of it. Very rarely do you approach it with a VC mindset to say, we as a company understand the skill set. We want to add value to this company, leverage all of our infrastructure. And I think across those three sectors, finding the right global partners to partner up with large, mature companies versus always startups. Startups are one of the hardest ways to make money and create jobs. Like it's
you need
bloody
ice in the
hard.
veins. I have a question for you. You talk about Darwin's finches as the metaphor, Matt, but it's obviously it presupposes a very long period of change. Something that comes into my mind, is AI potentially an extinction level event? That more like, the meteor that wiped out, I think it was extinction level event number 7 or 8 or whatever. I can't recall exactly because we had a number in Earth's history. But the more I see, even in my children, how they are reacting and what they are doing. I mean, I posed the challenge to my son the other day. He didn't study software engineering, but he was sitting next to me on TV and said, listen, I'd pretty much like to do some new app. I think it's a good idea. And as I'm watching TV, he's busy and he's like coding. And it was like 3/4 of an hour later and it's, I can't even comprehend the impact. So is it an extinction level event?
So I'll answer it intentionally in a long-winded way. I think if status quo continues of how people are thinking, AI replaces more than 70 to 80% of jobs, right? If we just carry on thinking normal. But using your kids as an example, using people I mentioned in the township, using the Kenyan folks, using YouTube to figure out rocket fuel. If we start thinking of AI, I'm not joking when I say, let's go to Soweto and pay thousands of ChatGPT subscriptions. Just like give folks who couldn't get the Harvard degree or even the UCT degree, give them a tool that can give you a sense of like tremendous knowledge access. And I think we'll unlock so much if we do that. If we commoditize it and figure out those who haven't had the opportunity to have good education, to have good housing, to good healthcare, to give them this tool, I think we're going to have massive discoveries.
I see it as, once again, the sort of paradox. Firstly, I'm always polite to my AI because if, things do go pear-shaped at a point in time, I'm hedging my bets.
You want to have a good track record.
Yeah, very good track record with my friend Claude, my friend Gemini, my old friend Chat, GPT, very polite to all of the AIs. But I almost see it as this lever, right? So we've spoken about, adaptive capabilities here and this concept of specialization versus generalists. But nowadays, if we think about this adaptable generalist, which is probably where a lot of people are heading, you mentioned the example with your son, Louis, it doesn't have to be a coder to build an app. Anybody coming from a specific background can pivot into something else because that base level of knowledge that AI enables to bring you up to a point of, I can actually do something. So having that base level skill set is now provided if we can get over those barriers of access. Love that quote earlier around, brilliance. And but won't you say that again, please?
Brilliance is evenly distributed, opportunity is not.
Man, it doesn't get better than that. Does not get better than that. And I think, if we choose to see AI as a major lever, we can unlock that brilliance across the continent. Yeah. I truly, truly, truly believe so. Gents, I know we've been having a fascinating conversation. We do need to sort of bring things together now at the end. You guys have both had phenomenal success in your careers. If we think about the next generation coming through, the next leader, and this could be, whether it's my daughter, still at a very early age, your guys' children's further along the journey, or the next startup founder in South Africa. If you're identifying or picking one characteristic, one capability that regardless of the industry that they want to get into, because we've seen now that on their journey, they're probably going to pivot across a number of different industries. They may study different things over time. They may cross the continent into different markets, maybe head to the US or Europe or wherever. What's that one characteristic that you would say, regardless of this tumultuous world that we're living in, will stand them in good stead looking forward?
The founder of our company, who's now retired, and that's a very interesting story, which I'd be remiss not to tell. It was started by Wolfgang Grulke, who is a world-renowned futurist. And but he very recently concluded a very, very significant transaction because he's also the biggest collector of ammonite fossils in the world. And he sold his collection to the Abu Dhabi national government for their natural history museum. And the numbers is staggering. So there is somebody who founded a company specializing in the future, him being a futurist, and he's made his money out of fossils. So, but he had a beautiful quote answering your question. He said, "Without passion, the cows don't calve." And I think many skills can be replaced, and it doesn't come naturally to everyone. But the skill set that I think will endure is a skill set of switching lights on when you come into a room. The EQ, bringing positive energy, speaking life into opportunity. Because by far the majority of people that you will encounter are exactly the opposite. They ask, why won't it work? Not why could it work? And I think if I were to give my sons advice, that really would be it. Bring the opportunity, look for the opportunity, bring the positive energy, because you will encounter exactly the opposite. And that alone will be differentiating.
Yeah, sure. It's a similar answer, but let me explain it. So I did this Kaufman Fellowship, which is kind of like an MBA for VCs, and they study a lot of university data, right? So Oxford University, MIT, you name it. And a lot of these universities have figured out how to commercialize their IP. So coming back to that statement of brilliance is evenly distributed, opportunity is not, I really believe we have some amazing IP on this continent. KZN is on the verge of figuring out cure for AIDS, for HIV, right? It's right here under our nose. Professor Andrew Forbes at Wits is working on insane quantum computing stuff, right? And what it boils down to me, like a skill set I really test for, is curiosity. Folks and founders that are curious, researching, looking at things, I love that.
Brilliant.
It excites me, and it's what motivates me. So stay curious.
Brilliant.
Stay hungry, stay foolish. As Steve Jobs used to say.
Folks, Louis, Pule, absolutely loved having you on the show. I think we've covered a lot of ground, but just such an energizing conversation. I love that. I think if we have more passion in what we do and we stay curious, we can survive any sort of disruption on the horizon that we're experiencing at the moment. And heaven knows the world we are facing at the moment is in an extremely volatile and disruptive place. I hope you enjoyed the episode today. As we mentioned at the start, this concept of Darwin's Finches really allows us to look at the world of innovation, whether it's from a VC, private equity, or corporate lens, slightly differently. That famous saying from Darwin being, it's not the species that is the fastest or the strongest that would survive, but that which is the most adaptable. And I think if we take the lessons that Louis and Pule have both shared from the stories that we've unpacked today, it gives us a really, really solid foundation to think about leadership and organizational innovation a little bit differently moving forward. That's it for the Fast Forward podcast for this episode. We hope you're enjoying the series, and please join us again next time on Fast Forward, powered by Futureworld.